May profits be upon you. Welcome to another weekly market forecast. In this video, we're going to look at the NASDAQ 100. The NASDAQ 100. First, let's start on the monthly time frame right now. All right. I should mention that I usually trade the NASDAQ futures. That's what I trade on, but I'm going to mark this one up because the NASDAQ CFD with FXCM seems to be pretty popular with my viewers and subscribers, so I'm going to mark this up instead. Very subtle differences between the two, but this one might give me a little bit more exposure for this channel. Now, what we can see is higher high, higher low, higher high, higher low, higher high. All right, it's an uptrend. It's designed to go up, and it still goes up. Yeah, every so often we have that big dip, right? But a little flash crash, if you want to say. But it always recovers. All right, and you see where it dipped down to? Boom. All right, this is the area of fair value. All right, that is created when a swing high is overtaken, all right, by a stronger buy. We have the sell before the buy, and then the price came back to it, found support, and then continued up higher. This happens on the higher time frames. It happens on the lower time frames the exact same way because price is fractal. Anyway, let's look at the latest and greatest. All right, what we see is 1, 2, 3, 4 candles, bullish candles. This is that Friday. April, the April tariff declaration by Trump, and then the recovery afterwards. All right, and then the push higher. And what did we create? Fair value gaps along the way. Right, one fair value gap, two fair value gaps. Right. And what are we looking for when we're looking at these fair value gaps, these inefficiencies of price to rebalance price? We want to see price offer fair value by coming back to those areas. And most times it does. All right. More oftentimes it does. And this one is the one we're looking at right now. This bullish fair value gap on the monthly. That's a monthly bullish fair value gap now. All right. And price could use that to go higher. It comes back to it, finds support, and then comes up higher. All right, that's a crazy looking arrow, isn't it? All right, so we are bullish on the monthly time frame. Am I correct? Okay. All right, let's go to the weekly time frame. All right, we already marked the swing high being overtaken here. This is actually a clean break of market structure there. That is a clean break. Price traded through it just like it did on the S&P and continued higher from it. Now, look at this. This is last week's candle. Look at that close. All right. It overtook the lows of the previous week before that, the previous week before that. It closed right at that level, overtaking 2 weeks of price action. It is a bearish engulfer. The up close candle and the bigger down close candle is a bearish engulfer where it takes the high and the low of the previous weekly candle. All right, it is a very powerful bearish indication. Okay, and where are we looking for it to go? We're looking for it to hit these lows as it runs into this bullish fair value gap. Now, again, remember that is a weekly fair value, a monthly fair value gap. All right, I'm going to take it away for a second and show you that there is a weekly fair value gap nested inside. It's 2-ply. All right, if you will. So it's a pretty dependable looking fair value gap, and we look for it to hold when price comes back to it. Now, this is the daily. All right, we got 2 bearish candles. Boom, boom. All right, and those are the ones that took over, that swept all of this liquidity This is low hanging fruit here. All right, this is low resistance, a low resistance liquidity run here. All right, we have these lows here that are going to draw price to it. So I'm looking for price to maybe push up a little bit and then continue down into the weekly fair value gap here. Now, inside of this weekly fair value gap, and let me hollow it out for you so you can see it a little clearer. All right, there is a bullish fair value gap here and another one here, another smaller one there. All right, I'm looking for price to come back into this fair value gap as soon as it hits this level, which is at 22,400, right around 22,400. I am going to go down to the lower time frame, the 1 minute, the 1 hour. Look for price to find its support at this level. And what am I looking for? I'm looking for price to do this: left, a lower low, a low, a lower high. If I can get it right, I'll be all right. A low, lower high, lower low, then a higher high. As soon as it does that, I'm going down to the 1 minute for my execution time frame and wait for price to come back into this high, just like I showed you with this high. All right, just like I showed you with on the monthly. All right, price will come back to it, find the support, and we can take a high probability trade to the upside. All right, so I'm looking for price to come down into this fair value gap here at 22,403, call it 22,400, and start to look for price to find the support that I think it will find when it reaches this weekly for fair value gap, which is nested inside of a monthly fair value gap, which is intersected by the swing high here. All right, and that just adds to the confluences of support. Okay, now I want to also show you with the Fibonacci retracement tool from the swing low to the high. And what we want to see is the 50% of this trading range. We want to see price come down below this 50%. And right below it is that fair value gap. All right. And right inside of that, right in the middle, is the golden ratio.